Hi there, my name is Jamie, and welcome to July's episode of Quick Market Talk with Experts. Today we have Ho Sing Fu, a veteran remisier who has been with CGS CIMB Securities since 1993. He is also a SGX Academy trainer. We last spoke to Sing Fu on 15th of May, where he shared his views on BYD and Ping An Insurance. Let's find out how those stocks have performed since, and which other stocks Sing Fu has formed a view on. Grab your cup of coffee and listen into our conversation. Hi, Sing Fu. If I can do a quick recap for our viewers, you mentioned your bullish view on two stocks, BYD and Ping An, on the 15th of May. On BYD, you had stated a support level of 233 Hong Kong dollars and $260 target level if the resistance at $250 can be broken. Now, looking at the stock, it truly has been on a bullish trend since, but not before dropping 6% from our video on 15th of May, where it dropped to around 229.8 before rebounding off this level on 29th of May to break above the 250 level and ultimately trade above to as high as 268.6 on the 15th of June. Now, looking at the BYD warrant that we talked about, Sing Fu, the BYD warrant that we talked about on the 15th of May was V2IW. You would have made 89.3% via this warrant, during which the shares went up 14.4%. Moving on to Ping An shares, Sing Fu, you thought that $55 to $58 was a good support level for the stock. However, the shares fell 14% in the next 2 weeks, and unlike BYD, it failed to rebound above the $55 support level that you mentioned. In this case, what would you have done?
Jamie, thanks for highlighting Ping An. So I very much like to share screen to show how has the Ping An share performed. All right, around the mid-May, we did when we did the video, Ping An was around 55. All right, since then the share price make a slight rebound and has broken the 55 level, which is actually a minor support level, and has gone below as low as 50. Right, so it was last mentioned that 50 is actually a major support. Breaking this support is actually potentially a cut loss level. But since then, the share price has gone into a sideways movement. So definitely it qualifies as a cut loss level, and the investor or trader shouldn't be in the share anymore. And the negative, the bullish pattern when the share was mentioned was very negated. All right, this is my contribution.
Yeah, thanks. I guess cutting loss is not always easy. It's a bit of an art, right? Because like we talked about BYD, the $233 was your support level, but then it did dip below slightly to just below $230, like I mentioned earlier, before rebounding and extending its bullish trend. So in the case of Ping An, $55 would have been your cut loss, but I guess along the way, where it kept going below $55, do you think, would you have considered revising your cut loss level on hindsight?
Yes, definitely. Right. $50 is a level.
Right. In this case, using our historical performance tool on warrants.com.sg, we would have seen that the Ping An shares that we mentioned in the last video, PNQW, over this period of time, if you, Sing Fu, you had entered into this warrant the day after our video, say on the 16th of May, and decided to cut loss when it went below $50 on the 31st of May, this would have, in fact, have translated into 76.2% loss versus a 13.8% loss in the share price. So whilst with BYD warrant earlier, we saw that it generate more than 80% return versus the 14% gain in the shares. The flip side of gearing via warrants is that if your view was wrong, you would in fact also see a magnified loss versus the share price loss or return. So that's something to take note of. Now that we're done with the recap, Sing Fu, I was just wondering if there has been any shares apart from BYD and Ping An that previously caught your attention, that most recently has your attention and analysis performed on them?
Yes. We have come to the end of the second quarter, so first half of the year, and potentially, in fact, coming to this time period around the end of July and August, all the major companies will be actually announcing results. So I think that it's worthwhile to look at some of the major bank stocks, the STI key components. How is the chart like? And potentially if you can find any tradable ideas. All right. So if you allow me to share screen, we would like to look at firstly at DBS. This is the chart of DBS. Just a bit of recall, the share price went as high as around this level, 36.36. And the share price drop fell to as low as 30.5 recently, mid-May. Okay. Now, the drop is basically, no, given the a big run from early this year on the increase in expanding net interest margin, given the high interest rate environment, the share has taken a bit of fall because some economic, talking about weakness in the economy and things like that, can potentially trigger recession. So the price, the bank has, and together with all the other STI components, has also fallen. However, if you're looking at the recent price trend over the last 5 days, we do notice some kind of a pickup in the buy volume. In fact, the price has rebounded from $30.50 to almost as high as $32.50 now, right? This level. For such a move, it's pretty quite a big move for DBS. And if we look ahead, all right, DBS is going to announce result for the first half on the 2nd of August. All right, so this time frame is actually a very interesting time frame because usually this kind of time window with the potential announcement of results and the potential of an announcement of dividends. This will attract buyers in the market, which actually is starting to happen looking at the price trend. All right. So if you look at the move now, DPS is actually the share price as the stochastic on the second window here indicated by my cursor. So that actually is on an overbought region. All right. So maybe a better, there's a potential for the price to pull back to the support of $32 level, or even go slightly lower than that. Okay. Right. So, given the strong, the share has already made some kind of a triple bottom. So, if the $32 support level holds, the next support level we're looking at is the next target we'll probably be looking at is $33. So, in summary, potential pullback to support at 32, and then after, if the rally could carry on to as high as $33. Yeah, Jamie, back to you for DBS at this point in time.
Yeah, thanks for that, Xingfu. So, if you were keen to once again employ warrants to trade the bullish view on DBS, what you could do is, Xingfu, maybe you can remind me which tool would be the tool to use to compute a estimated return on the warrants to trade your.
Yeah. Okay. Firstly, we probably go to warrant selector to look for the underlying.
That's
Right.
right. Thanks,
Say
Xingfu,
for
for
the
that.
DBS. Yeah.
So, yeah, drop down to DBS. In this case, you are bullish, correct? So we will choose a call warrant.
Call warrant.
Okay, and we can have a look at the chart here where currently on the 18th of July, it's trading at 32.55 at 11:15 a.m. Okay, and Xingfu was saying he could potentially be looking at the $33 target price from here. That is a 1.4% return from today's level. Xingfu, what kind of time range will you be looking at?
The results are due on the 2nd of August, so we're looking at almost like a 2-week kind of time frame.
Okay, and if we have a look at the 2-week time frame over here, this warrant with the fire logo 8R9W with the expiry date close to 1 year from now on the 1st of July will generate a return of approximately 4.5% from today when the stock goes up 1.4% in 2 weeks. whether it's moving just before the earnings announcements or after, you will notice that this second warrant here would generate no return. And that's because, different warrants have got the different gearing level, but also different expiry. In this case, this one expires on 10th of October. So before, the date of 1st of July, and it's basically got just about a less than 3-month tenure from the date today. And as a result, the time decay erosion has eroded the gains that the gearing effect of the warrant is able to bring. So it would have a 0% return. So those who are looking at a 1.4% upside target on the share price of DBS would want to avoid this warrant, okay? But instead choose between these two warrants of 8R9W as well as WNDW to decide if they want to use this warrants, either of this warrant, to trade the view instead. Seng Fu, we're done with DBS, but if I'm not wrong, UOB is actually the first bank to report its earnings ahead of DBS, correct? So would you
Yes,
have a view
Jamie.
on UOB, and would that correspond with your view on DBS?
Sure. Let's look at UV next. But by the way, I really like the warrant, the calculator they just show, to give us an idea of how to actually narrow down to the warrant that will likely respond to the trading view. Okay. Right. So now our screen here shows the UOB, and the results similarly is actually due. In fact, it's due on the 27th of July, in about 10 to 15 days time. Similar to the DBS price move, right? Beginning of this year, there was a big rally in all the banks, and UOB has moved up to as high as 31.30. However, it also has similarly fallen, right, up to in mid-May, hit a level of about 27.40, and since has been moving sideways, very much a very tight trading range for the past 2 months or so, right? If we were to narrow down to the time period, okay, like this part here. So we look at the right side. Similarly, there was some kind of a rebound from 27.20 all the way up to as high as 28.10, 28 and 10 cents. This is a very minor resistance level that is meeting at the moment. Okay, there was a pullback, and so far I like the pullback. I think the pattern of pullback is because as it was putting back, you notice that the red volume color bar here has shrunk, meaning the people who are selling into the pullback is actually diminishing, right? So potentially, if the price can stay around here, the next resistance level you're talking about will be as high as 28.50. All right. So given this time frame, it seems to be a interesting period to be looking at a potential trade in UOB, and especially the banks, given the half year, they are also going to be announcing a dividend payment. Right. So this might be a potential trading idea with a support level at about 28.20, 27.20. First resistance at 28.50, and then potentially to the $29 level. All right. So Jamie, given this trading plan or trading view, how can we execute this plan if investor is looking to use warrants to capitalize on the view?
If you were looking to capitalize on your view via warrants, and obtain a leverage return there, again, we can repeat the same exercise via the warrant selector tool to select the best warrant amongst, the available UOB warrants, that is listed on the market. In this case, there are 3 warrants that are on tight spreads. And if we entered, $29, okay, and you do the same exercise of increasing the number of weeks you hold on to, that you plan to hold on to warrant for, you see that it decreases to the point where this warrant, the warrant in the middle, 98CW, would start generating a loss instead of gains. And so if you're wanting to hold this for more than 2 months, you probably eliminate the second warrant and choose between the first and the third warrant of EXFW and ZLNW. And if you are interested in the exact date to look at, as to how long you can hold on to the warrant for, then the warrant calculator tool is your tool to go to. We'll speak again.
Thank you. Bye-bye.
Bye now. Bye.